Tariffs are essentially taxes on imported goods. They are designed to make foreign products more expensive, which makes domestic products more appealing to consumers. Governments impose tariffs for different reasons. Sometimes it is to protect domestic industries from foreign competition. Other times it is to generate revenue or address trade imbalances. However, tariffs can have far-reaching economic consequences. They can disrupt global trade flows, increase consumer prices, and fuel trade tensions between nations. The recent trade war between the United States and China brought the issue of tariffs to the forefront of global economics. The US imposed significant tariffs on Chinese goods, and China retaliated with tariffs of its own. This tit-for-tat escalation had a ripple effect across the global economy. It disrupted supply chains and created uncertainty for businesses worldwide. While the US-China trade war has garnered significant attention, the impact of US tariffs on India's economy is equally noteworthy. The US is India's largest trading partner, making the impact of these tariffs particularly significant. The imposition of tariffs by the US on Indian goods, and India's subsequent retaliatory measures, have led to a complex and often tense trade relationship. This essay will delve deeper into the intricacies of this relationship, examining the impact of US tariffs on various sectors of the Indian economy. In 2018, the Trump administration imposed tariffs on a range of goods imported from various countries, including India. These tariffs, part of the administration's broader America First trade policy, were aimed at protecting American jobs and industries from what the Trump administration deemed as unfair foreign competition. For India, the tariffs initially targeted steel and aluminum products. These were seen as crucial sectors by the US government. The initial tariffs imposed on India amounted to approximately $5.6 billion worth of Indian goods. This included steel, aluminum, and textiles. This move was met with immediate concern from Indian businesses and policymakers, who feared the tariffs would harm Indian exports and jobs. The impact of these tariffs on India's economy was swift. Indian exports to the US, particularly in the targeted sectors, declined. This raised concerns about job losses in these industries. The tariffs also created uncertainty for Indian businesses, leaving them unsure about the future of their exports to the US market. The impact of US tariffs on India's economy was not uniform across all sectors. Some industries were more vulnerable than others. For instance, the steel and aluminum industries, already grappling with overcapacity and weak global demand, were hit particularly hard. The tariffs made Indian steel and aluminum products more expensive in the US market, impacting their competitiveness. India's steel industry, while a global giant, sends a relatively small portion of its exports to the US, so the impact was somewhat muted. However, the fear was that US tariffs on Chinese steel would lead to a glut of Chinese steel on the global market. This could drive down prices and hurt Indian producers. The textile industry, a significant employer in India, also felt the heat. The US is a major market for Indian textiles, and the tariffs led to a decline in exports, impacting jobs and revenues in this labor-intensive sector. The tariffs also had broader implications for other sectors. The IT industry, for instance, faced uncertainty due to the potential impact of tariffs on the services they provided to US companies. The pharmaceutical industry, a major exporter to the US, was also worried about the potential impact of tariffs and changes to US drug pricing policies. The tariffs, while not directly targeting pharmaceuticals, contributed to a general atmosphere of uncertainty in the US-India trade relationship. India, unwilling to accept the US tariffs without a fight, retaliated with tariffs of its own. These retaliatory tariffs targeted a range of US products, including agricultural goods, motorcycles, and chemicals. The Indian government carefully selected these products to exert pressure on US industries that had significant political clout. India's retaliatory tariffs, while aimed at imposing economic costs on the US, also had consequences for the Indian economy. The tariffs made certain US products more expensive for Indian consumers and businesses. This, in turn, could lead to higher prices for consumers and increased input costs for businesses. The retaliatory tariffs also did little to address the underlying trade imbalance between the two countries. The trade imbalance is a major point of contention in the US-India trade relationship. The tariffs further strained the already tense trade relations between the two countries, making it more challenging to find a negotiated solution to the trade dispute. Section 5 Troubled Waters, U.S.-India Trade Relations Adrift. The imposition of tariffs and the subsequent retaliatory measures marked a low point in U.S.-India trade relations. The tariffs created an atmosphere of distrust and animosity, making it more difficult to address the underlying trade issues between the two countries. The trade tensions spilled over into other areas of the bilateral relationship, impacting cooperation on issues such as defense and security. The trade dispute also highlighted the challenges of balancing domestic political pressures with the need to maintain strong trade relations with key partners. For both the US and India, the tariffs were partly driven by domestic political considerations, particularly the need to appease domestic constituencies concerned about job losses and unfair trade practices. The trade tensions also underscored the importance of the World Trade Organization in resolving trade disputes. However, the WTO's dispute resolution mechanism was itself under strain. The Trump administration blocked appointments to the WTO's appellate body, effectively paralyzing its ability to issue binding rulings on trade disputes. Section 6. American companies in India, navigating the tariff storm. The trade war between the US and China, coupled with the tariffs imposed on India, created a challenging environment for American companies operating in India. These companies found themselves caught in the crossfire of the trade dispute, facing uncertainty and potential disruptions to their supply chains. Some American companies in India experienced a decline in sales due to the tariffs. This was partly due to the retaliatory tariffs imposed by India on US goods. It was also partly due to the overall economic slowdown in India, which was partly attributed to the trade tensions. The tariffs also created uncertainty for American companies looking to invest in India. The unpredictable nature of the trade dispute made it difficult for companies to plan for the long term. Many companies adopted a wait-and-see approach before committing to new investments in India. Despite the challenges, many American companies remained committed to the Indian market. India's large and growing consumer market, coupled with its skilled workforce, continued to make it an attractive destination for foreign investment. Section 7. The Indian consumer. Feeling the pinch of rising prices. While the impact of the tariffs on Indian businesses and the broader economy was significant, Indian consumers also felt the pinch. The tariffs, coupled with the retaliatory measures taken by India, led to price increases for a range of consumer goods. These goods included electronics, automobiles, and certain food products. The price increases were particularly pronounced for products that relied heavily on imported components. The tariffs made these components more expensive, forcing manufacturers to pass on the increased costs to consumers. The tariffs also led to reduced product choices for Indian consumers. As some American companies reduced their presence in the Indian market due to the trade tensions, Indian consumers had fewer options to choose from. The impact of the tariffs on Indian consumers was particularly acute for lower-income households, who spend a larger proportion of their income on essential goods and services. The price increases put a strain on these households' budgets, forcing them to cut back on spending or make difficult choices about their consumption patterns. Section 8. A trade relationship in limbo. The uncertain future of US-India trade. The trade tensions between the US and India have had a significant impact on the bilateral trade relationship. The tariffs and retaliatory measures have created an atmosphere of uncertainty and distrust, making it more difficult to address the underlying trade issues between the two countries. The future of US-India trade relations remains uncertain. While there have been some attempts to resolve the trade dispute, these attempts have so far yielded limited results. The Biden administration has signaled its willingness to engage with India on trade. However, it remains to be seen whether the Biden administration will be willing to roll back the tariffs imposed by the Trump administration. The Indian government, for its part, has indicated its willingness to negotiate a trade deal with the US. However, India is likely to drive a hard bargain, seeking concessions on issues such as agricultural subsidies and visa restrictions for skilled workers. Section 9. Conclusion. Finding common ground in a turbulent trade landscape. The trade tensions between the US and India highlight the challenges of managing trade relations in an increasingly interconnected global economy. The tariffs and retaliatory measures have had a significant impact on both economies, disrupting trade flows, increasing consumer prices, and fueling uncertainty. Finding a solution to the trade dispute will require both sides to show flexibility and a willingness to compromise. The US will need to address India's concerns about agricultural subsidies and visa restrictions. India will need to be more open to addressing US concerns about market access and intellectual property protection. A trade deal between the US and India would not only benefit both economies, but it would also send a positive signal to the rest of the world about the importance of free and fair trade. However, reaching a deal will require both sides to move beyond the rhetoric of the trade war and focus on finding common ground.